Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, and Overstock before it shot up over 1,000%. This power gauge comes from the legendary Mark Chaikin. And right now you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugetrial.com for your free look. Again, that's powergaugetrial.com for your free look. All right, let's get to our segment today. Hi, this is Daniela Cambone and welcome back to Stansberry Research. We are talking gold prices today and where are they headed? Please welcome back to the show Chris Mancini. He is an analyst for metals and mining over at Gabelli Asset Management. Chris, good to see you again. Welcome back to the show.
Daniela, great to be here. Always fun and always great to be here. Thanks.
Excited to get your insights here. We're talking gold. I'll ask you some questions on silver and, of course, the mining space. Let's start with gold because I've been reading your research and you've been tracking inflation to kind of give you clues as to where you think the gold price is headed. And you recently said, look, gold made its big move from $190 to 800 per ounce from 1978 to 1980 as year over year CPI accelerated from 6.5% to 14%. You say, quote, I believe that the price of gold will move higher if year over year CPI accelerates in a similar manner to 1979. So as we're speaking today, we're roughly at 7.9%. What is this telling you? Where do you see gold headed?
Yeah, I think that it all depends on whether or not CPI does accelerate. So, and it has been accelerating. I mean, the Fed's trying to stop it from accelerating. We'll see if they're successful. If they're not successful, and we see the 7.9 go to 8.3, 8.5, 8.7, or something like that, I think the gold will continue to tick up with this acceleration in the CPI. What we really need is, for gold to move, you need to start getting the average American to be scared that inflation is here to stay. And I think that so far the Fed has done actually a pretty good job of jawboning it down, of jawboning inflation expectations down, meaning that they've been saying first there was the whole transitory thing. Now they're saying that they're going to do whatever it takes to get inflation to stop going. So if the market and the average American gets the sense that the Fed doesn't have it under control, gold will do really well.
I think it's interesting you say that because if you speak to most people, they, in the conversation, they feel the pinch, they see prices higher. You're saying that fear element you feel is not there yet.
I don't think so. I mean, I think that, you have, if the market really felt that inflation was going to stay at 8%, you wouldn't have bonds trading at 2.5%. I mean, you would have there's just not this sense that, I don't want to say panic, but a real fear has to set in. I mean, people are feeling the pinch, so to speak, but they're not saying, rich Americans aren't saying, I have cash in my bank account, which is losing 8% per year. What they're saying is, I have cash in my bank account. Yeah, I'm kind of feeling a pinch. We're hearing this kind of inflation story, but it's going to come back down. Inflation's not going to persistently stay at this level. So they're still holding on to their cash. I mean, what we need is for people to say, okay, wait a second, this cash is losing money, a lot of money. It's like losing money, losing value. And I'm going to shift some into an asset which is not losing value, which is gold. So I don't think that that's happening yet.
Yeah, that's interesting you say that because and I mentioned this in other episodes, I've been speaking to a lot of my sources at bullion dealers, and that's a lot of the conversations that are happening now, though, Chris, at least from what I've been hearing, is that I feel that there does seem to be a bit of this panic of, okay, maybe I have too much cash in the bank right here. Maybe I do need to shift some into gold. But maybe we are just at the start of it.
You know what? That's sorry, Danny. No, I mean, I think that's interesting intel. I mean, I haven't had that level of conversation with bullion dealers and things like that. But yeah, I mean, if, I just think that if when you think about really, really rich Americans, there are lots of Americans who are billionaires. And if they were to put 10% of their assets in gold,
Yeah.
that would be a really big deal, right?
Yeah.
And
No,
so,
fair.
right, and I don't think we're, the conversations might be starting, but I don't get the feeling that, that the average rich
Yeah.
American is really, really worried about this right now.
Fair enough, fair enough. And just before we go any further, I just want to get your gut feeling, which I usually find is a good gauge. As do you think that the Fed will be successful in taming inflation with their interest rate plan? Will they be successful, Chris? What's your take?
I think what's going to happen. Yeah, that's a good question. Thanks for putting me on the spot. But I think that I think that I think that what'll happen is that the Fed it won't be successful because of what we've been seeing all along in terms of every time they try to raise rates, it really hits the economy. And we're seeing it now with housing. Housing starts are down. New home sales have been flattening. We see PMIs coming off of their highs. So the Fed will try to, and it'll continue to raise rates, but as rates rise, economic activity will decline, and then they're going to be in a bind. And I think that they're going to move towards stopping those rate increases because if unemployment picks up, people start to feel uneasy about those kinds of things. I think that's what the Fed's going to be more concerned about than taming this inflation at this point in time. I mean, it has the capacity to do it, but I don't think it'll have the political will to do it.
So that said, if you feel that, if inflation will not, if we see an uptick in inflation, where does gold go? Like, are you in the $3,000 camp, $5,000, $2,500? Where does Chris Mancini go?
I think that we're in an upward trend now. And I think that the market does realize the Fed's in a bind. Inflation will continue to accelerate here. This whole Russia invasion, or this Russian invasion of Ukraine, is causing inflationary pressures. So I think we're in an uptrend. I mean, when you mentioned that 1975 to 1979 period, gold went from $200 to $800 an ounce. So in that kind of circumstance, we are talking about gold price a lot higher, right? I mean, in terms of the inflation starting to accelerate now, if inflation accelerates to 15, 16% like it did in 1979, from where we are now, then gold would, theoretically go to $8,000 an ounce.
Now, you mentioned Russia. Let's bring that up a second. They are a huge producer of gold. They might not be able to, given the current sanctions, be able to sell it where they wanted to sell it. So what does this do to the price if they may only be able to get China and the Middle East as buyers here?
Yeah, I mean, I think that gold will find its way into the market in some way, shape, or form. So, I mean, they might get a really big discount for what they're selling, but gold, especially gold, Russia. I mean, it has a way of making its way into markets. So, meaning that if they sell it through India, they sell it through China, it's smuggled some way, some shape, some form. But it'll probably make its way into the market. The Russian producers probably won't get what it's worth, but I think it'll make its way into the market. I'm not concerned about that being like a supply shock for the gold market, although it's obviously not a positive thing.
Well, let me ask you this before we talk ETFs. As I had another guest on saying, look, what we saw happen in nickel, right, where the LME was like, all right, shut everything. Do you see that as ever happening in gold or silver?
I mean, I think it's always possible. I mean, there's a huge short interest in gold. I mean, there was a huge short interest in nickel. Like, why did it happen in nickel as opposed to copper or zinc or some other base metal? I mean, who knows? Somebody was caught short and they had to cover their short, and so sure. I mean, it's a huge futures market, a huge paper market in gold.
Wow.
So like
Yeah.
anything could happen. Sure.
Possibilities there for you.
Yeah. Yeah.
Let's talk about some trends you've been seeing. You say money has been flowing into physical gold ETFs over the past 3 months, while money has been flowing out of the largest gold miner ETF. You say there was a similar dynamic of money flows in March 2020 during the start of the COVID crisis. As broad markets began to stabilize in April 2020, money started flowing into gold mining ETF and gold stocks increased by 100%. And you show us a chart which shows ounces in gold backed ETFs, that's the white line, versus shares outstanding of the passively managed VanEck Gold Miners ETF, the blue line. The divergence in flows since December, you say, is noteworthy and extraordinary. Noteworthy and extraordinary. Why, Chris? Why?
Right. Well, it's funny how you can use the English language to make something seem extreme. But all I'm saying is that it's worth talking about, and it doesn't happen a lot, right? That's all I'm saying. But it is noteworthy and extraordinary. Yeah. Well, it's noteworthy just because it is extraordinary in that typically the gold. The flows will, if there are flows into gold-backed ETFs, there will also be flows into gold stocks, just because whatever's driving the interest in gold will typically find its way into gold mining companies too. Because gold mining companies are essentially, gold mining stocks are a derivative of physical gold, more or less. But what's happened in the last 3 months is that we've seen inflows into the gold-backed ETFs. So people have been buying gold-backed ETFs, but they've been selling the VanEck Gold Miner ETF, the GDX, because the shares outstanding of the GDX have declined. And I think and similar thing happened at the start of COVID. And I think that happened at the start of COVID because the broad market got smashed. And so people just sold gold stocks with other stocks, general stocks and bonds and other stuff like that. And there were inflows into gold, physical gold. And I think maybe at the beginning of this year, similar kind of dynamic took place where people just bought gold as a haven trade, but the stock market got hit, and the gold stocks actually didn't get hit, but there were outflows from the GDX because, broadly speaking, the market sold gold stocks along with other stocks. So if the gold stocks, if the gold stocks kind of catch up to physical gold in terms of flows, then we could see the gold stocks do really well.
So that said, as an investor, if you're looking at entering the gold space right now, are the miners your best bet? Should you have a mix of the miners, physical, ETF? What would be a good approach?
I think the miners are very cheap. And they are the best way to play it. The miners are more volatile than physical gold. So you have to be willing to kind of stomach that volatility. But the miners are cheap. They're generating lots of free cash flow. There's some headwinds to the miners in terms of cost inflation, but that's why you have to pick, the miners that might be less exposed to cost inflation.
Well, I thought it was interesting that the average cost of mining hadn't changed that much. The last numbers I was looking at, it's around $1,129.
Yeah.
I thought it was going to be, greater given inflation, but it hasn't hit the mining sector yet. Is that a fair statement?
Right. Yeah, I think it's interesting because the thing about gold mining is that it takes place all over the world in all different jurisdictions, all different ways. So, we've seen a lot of inflation in the United States and in the West in terms of labor inflation. But that hasn't really existed like in South America or in Africa, for example. Like the cost of labor hasn't gone up that much in those places. The other thing is that if you have an underground mine in Quebec, for example, it doesn't use a lot of oil like petro-based energy. It uses a lot of, not a lot, but uses some hydro, which is very cheap. And it's underground. They don't use big trucks. So an underground mine in Val d'Or the costs there shouldn't really go up as much as they would have in a big open pit in Nevada. So it all kind of comes out in the wash. So that's kind of why we haven't seen yet this big increase. But I think we might start to see the cost go up at various operations.
want to talk about the cryptocurrencies with you now. We all
Oh,
know
okay.
last you were on made headlines because you see gold as really God's money and not Bitcoin. Have you had, I mean, this is a while back, so have you had a change of stance at all on Bitcoin or the other cryptocurrencies?
No, I haven't. And I mean, I just think what makes gold unique, what makes it stand alone, what has enabled it to be the currency of the world for the past 4,000 years is that it is unique. You can't make another gold. And when we were talking a few years ago, Bitcoin had started doing these forks off of Bitcoin, where they created another crypto instrument off of current Bitcoin. You can't put an ounce of gold in your drawer and then you wake up one day you have another little ounce of gold or platinum or
But
something
that'd be
like that,
nice,
right?
but yeah,
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 it would be nice, but that's what happened for Bitcoin
right.
owners. And since we spoke, it's just been more and more cryptos have been created. So I think I read there are 18,000 cryptos now in the world. So how do you say that it's unique if more and more get created every single day? So it doesn't, and there's a lot of speculate. There's been more speculation in Bitcoin since we've spoken. And I see people walking around, my son's football game in the fall, with a T-shirt, Bitcoin 100,000. People with a Bitcoin hat on. And I mean, I don't know. There's a lot of speculation in it, and it's become less and less rare in the past couple of years.
Well, Chris, that's why you got to show up with your gold
Yeah.
20,000 t-shirt, right?
Well, yeah,
How cool
exactly.
would
Well,
you be?
don't worry. I do have that on underneath my shirt here.
Uh,
I do have the gold 20,000. But if I start to see that at my kids' football game, I'll tell you, and we can start to sell our golds,
there you go.
our gold stocks.
No, I know, and I want to say, Cyber Hornets, don't come for Chris because he's a good guy and he makes a lot of sense. So, and this is his opinion.
Thank you. Yeah,
Um,
please don't come for
so,
me.
yeah, please don't come for him. Just final thoughts because I know you see the numbers. Would you say has Bitcoin been hurting gold's market cap? Is it really chipping away? I know we've spoken about this in the past, but today,
Yeah.
have you seen a dent?
I think so. I mean, I think it has been. I mean, I think that to some degree, it was interesting. I mean, I went to go see a financial advisor again in the fall sometime, and a big financial advisor in Greenwich, Connecticut, and we sat around the table, and he just said to all of his like teammates, the lead advisor, he said, how many of you have Bitcoin here? And like I think maybe something like 5 of 10 like raised their hand, and how many of you have gold? And maybe 1 or 2. So I think I think to some extent it has been drawing some interest away for sure. I just think again that like as it becomes more diluted, like with more of these cryptocurrencies and maybe some speculation comes out of it, I expect gold to do better and to get some of that interest because it is the real currency, as opposed to Bitcoin, which again I just don't think is rare. Anyway,
Chris, Chris Mancini, gold is the real currency. All right,
yeah,
you heard it here first. I always appreciate your thoughts, Chris. Come back
thanks,
anytime. Love
Daniela.
chatting with you.
Okay,
Appreciate it.
okay, great, okay.
And thank you all for watching this edition of Stansberry Research. We'll have more coming your way. And don't forget to sign up at danielacambone.com so you can be alerted anytime there's a brand new interview. Thank you all for watching. That's it for me.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.